Have you ever wondered why so many people start trading Forex with big dreams, yet only a small percentage stay profitable over the long term? Every day, thousands of traders open their charts, watch YouTube videos, buy expensive courses, and search for the perfect strategy. They believe the next indicator, the next signal, or the next mentor will finally make them profitable. But after a few weeks or months, many have lost money, blown their accounts, and started asking the same question: why isn't this working? Here's the surprising truth. Most traders don't fail because they have a bad strategy. They fail because of the decisions they make before, during, and after every trade. Fear, greed, impatience, revenge trading, and poor risk management quietly destroy accounts long before the market does. In fact, two traders can take the exact same setup. One follows the plan, accepts the result, and protects their capital. The other changes the stop loss, closes the trade too early, or risks too much because they want to get rich quickly. The market is the same, but the outcome is completely different. So, what separates consistently profitable traders from everyone else? Is it intelligence? More experience? A secret strategy? Or is it something much simpler that most people completely ignore? In today's video, we're going to break down the real reasons why most Forex traders fail, the biggest mistakes beginners make, and the practical habits that can help you become more disciplined and consistent over time. Whether you're a complete beginner or you've already experienced losing trades, stay until the end, because one idea in this video could completely change the way you think about trading. Let's begin. Before we talk about why most traders fail, let's clear up one of the biggest myths in the trading world. Many beginners believe that if they can just find the perfect strategy, they'll start making money consistently. They spend hours searching for the best indicator, the best entry signal, or the strategy with the highest win rate. They jump from one YouTube video to another, from one course to the next, always thinking the next method will finally solve all their problems. But here's the reality. There is no strategy that wins every trade. The market changes constantly. Some days it trends, some days it moves sideways. News events can create unexpected volatility, and even the best setups can fail. That's not because the strategy is broken, it's because uncertainty is part of every financial market. Imagine two traders using exactly the same strategy. They see the same setup, enter at the same price, and place the same stop loss and take profit. The first trader follows the plan exactly. If the trade loses, they accept the loss and wait patiently for the next opportunity. The second trader becomes emotional. As soon as the market moves against them, they move their stop loss further away because they hope the price will come back. If the trade goes into profit, they close it too early because they're afraid of losing what they've made. After one loss, they immediately jump into another trade without waiting for a proper setup. By the end of the week, the first trader may not have won every trade, but they've protected their account and stayed disciplined. The second trader has broken every rule in their trading plan, and their account reflects those decisions. The lesson is simple. A strategy is only a tool. The person using that tool determines the outcome. Successful traders don't search for perfection. They build consistency through discipline, patience, and solid risk management. So before asking, what's the best strategy? Ask yourself a better question. Can I follow one good strategy with discipline for the next 100 trades? That question alone can change your entire trading journey. Now let's talk about the part of trading that almost everyone ignores: psychology. The market doesn't know who you are. It doesn't know how much money you have, how badly you want to win, or how many hours you've spent studying charts. The market simply moves based on buyers and sellers. The real battle isn't between you and the market, it's between you and your emotions. Think about this. Have you ever closed a winning trade too early because you were afraid the market would reverse? A few minutes later, the price continued to your original target, and you felt frustrated. Or maybe you've watched a losing trade hit your stop loss, only to enter another trade immediately because you wanted your money back. That's called revenge trading, and it has destroyed more accounts than bad strategies ever have. Then there's greed. You tell yourself you'll risk only 1% on a trade, but after a few wins you feel unstoppable. You increase your position size, convinced the next trade will also be a winner. Instead, one loss wipes out several days or even weeks of progress. Professional traders understand something beginners often don't. Every trade is only one outcome in a long series of trades. They don't judge themselves based on one win or one loss. They focus on following their process. Imagine flipping a coin that lands on heads 60% of the time. You wouldn't expect every flip to be heads. You'd expect some losses. But over many flips, the odds work in your favor. Trading works in a similar way. Even a good strategy will have losing trades. That's why discipline is more important than trying to avoid every loss. The traders who last for years aren't the ones who never lose. They're the ones who stay calm, protect their capital, and keep making good decisions regardless of the outcome of the last trade. Remember this, your emotions will always try to convince you to break your rules. Your success depends on having the discipline to follow them anyway. So, after everything we've talked about, the big question is this: how do you avoid becoming part of the 95%? The answer isn't finding a secret indicator or a strategy that never loses. It's building habits that keep you in the game long enough to improve. The first habit is simple: always protect your capital. Think of your trading account as your business. A business can't survive if it loses all of its money in one bad decision. That's why experienced traders focus on protecting their capital before thinking about profits. The second habit is to have a written trading plan. Before you enter any trade, you should already know why you're entering, where your stop loss is, where you'll take profit, and how much you're willing to risk. If you don't know these answers before clicking the buy or sell button, you're probably gambling instead of trading. The third habit is patience. The market opens every week and creates thousands of opportunities every month. You don't have to catch every move. Waiting for high quality setups is often more profitable than taking many average trades. The fourth habit is keeping a trading journal. After every trade, write down why you entered, how you felt during the trade, and what you learned. Over time, you'll start seeing patterns. You may discover that your biggest losses happen when you're tired, impatient, or trading outside your plan. A journal helps you improve by learning from your own decisions. Finally, accept that losses are part of trading. Every professional trader has losing trades. The difference is that professionals keep their losses small and never let one bad trade define them. They know consistency comes from following a process, not from winning every time. So remember this: the goal isn't to become a trader who never loses. The goal is to become a trader who manages risk, controls emotions, and keeps improving one trade at a time. If you focus on discipline instead of excitement, on consistency instead of quick profits, and on learning instead of chasing shortcuts, you'll give yourself a much better chance of succeeding in the long run. Thank you for watching. If you found this video helpful and want to learn more about trading psychology, risk management, market analysis, and my journey toward funded trading, make sure to subscribe and turn on notifications so you don't miss the next video. I'll see you in the next one.
Every trade taken, order filled, either buy or sell, profit or loss. There's always a lesson attached to every single one of the trades taken. Every loss is an opportunity to learn from your flaws, and every profit should be studied to help take exact type of trades.